More news and updates. The Indian IT industry is undergoing a fundamental transformation driven by AI integration, reversing the growth and hiring surge seen during the COVID period. Recently, several companies have announced job cuts, citing AI-driven automation and efficiency as the key factors reshaping how IT companies scale and operate. Before we get in, Sumit Pokharna from Kotak Securities to discuss AI's future impact, as also maybe get in a word on telecom. Let's hear it from my colleague Hiral on how the AI wave is currently impacting this space. Hiral.
Thank you so much. Clearly, it's AI which is hijacking the IT jobs market, and that's what is evident so far. So the key questions we're asking is AI actually killing employment and growth? That is one of the key things that you're looking at. Secondly, Indian IT industry is probably undergoing a structural shift post-AI, and because of which, if you talk about the hiring and growth surge that was seen during COVID, that has probably reversed as well. Now, the last thing is this AI-led efficiency and project efficiency that is changing how IT giants scale from here on or not. To look at all of this, let's quickly look at the hiring trends as well. The boom has been fizzling out in an AI era in India. If you talk about the pre-AI era, if you versus COVID to post-AI, TCS, which had added almost 70,000 plus employees, it boomed to almost 1.7 lakh employees between FY20 to 22, that's COVID area, and then from FY22 to 25, it's added only around 15,700 employees. Similar is the trend with Wipro as well, where you did see a boom to the tune of almost 60 to 61,000 employees in FY20 to 22 during COVID, and now, in fact, they've gone down and slipped by around 2,800 employees. And with regards to Infosys as well, which is known for its hiring trends, around 34,000 employees were added then. During COVID, around 85 to 86,000 employees were added in that phase. And now post-AI coming in, you just have a 9,500 kind of an addition that has come in. So this is clearly telling you that there has been a slow movement in terms of additions. And Infosys, which was one of the hirers, has been actually looking out. Now, similar trend has been seen even with global players like Accenture and Cognizant, which you can clearly see the kind of boom that came in during COVID, 2.3 lakh employees that were added during COVID for Accenture. Cognizant was around 62,800. The way it has come down, where in terms of Cognizant, it's actually reducing to the tune of almost 11,500 employees. So that's the trend that you're picking up in terms of where hiring goes. Now let's look at attrition. What has happened to attrition is that in pre-COVID period, attrition has inched higher. And that's the trend from 10.5 in FY17. If you look at the first period, it's gone up to 11.3 for a TCS. Similarly, from 15% for a Infosys, it's gone up to 20.4%. Whereas for a Wipro, from 16.3, it's gone up to 17.6%. And this is in pre-COVID period. If you look at the COVID era as well, let's quickly look at that attrition profile. It actually went up again from 12.1 to 17.4. For Infosys, it's actually jumped to around 27.7 in FY22. And for Wipro, it's jumped to around 23.3 from a 14.7. And lastly, if you see in terms of the next attribute as well, maximum employee churn has come in FY23, whereas 24 and 25 have shown some signs of stability as well, and that's what is indicated in terms of where the numbers go. Very lastly, if you see in terms of the growth profile, Infosys and Wipro has the highest churn, that is indicating volatile workforces from here on. Next, if you see, the attrition has dropped by around 600 to 800 basis points across firms by FY25, which has mainly been aided by hiring freezes and cautious outlook. And if you talk about the revenue growth, that is also mirroring, because if you talk about the constant currency revenue growth, that has been slowing down. From FY17 to 19, pretty much, I mean, that range has been increasing for companies. But if you see the COVID area, that's the time you've started to see some bit of softness. It was only FY22 where all the companies saw a good boom. But post that, the moment AI has come in, if you talk about the growth trajectory, you can see the charts clearly dwindling. So that's the kind of trend that you're picking up, where you're saying that with AI coming in, your workforce is going down, but growth is also being impacted.
Okay. Hiral, thanks. That's comprehensive. And let's get in Sumit Pokharna. He's VP of Fundamental Research at Kotak Securities, joins us on the show to talk about how he thinks about this as well. Sumit, good having you. Thanks for joining in. And this becomes the key talking point simply because of the kind of corrective moves that we've seen in the IT index, right? Over the last 1 month, what's it about over 10%, sulking in trade today as well. Uh, Somebody made a point recently, Sumit, that a shrinking workforce need not mean shrinking business for Indian IT. And they could recoup this even with a lower workforce because of automation. Could that be true?
Thanks for inviting me. What you said is right because every company or client is looking for productivity gains right now, and AI is helping them. All companies are open to try AI to improve their productivity. But still, we are at the exploration stage for the time being. So far, AI is concerned. We have not yet, none of the Indian IT companies have got a big order purely based on AI. It's just supplementing the existing work. So a lot of efficiency, accuracy, hallucinations, all those things is yet to be clarified whether AI can take care of that. So as I mentioned earlier, we are at the exploration stage. Now coming to the attrition, hiring trends and all that, I will give a bigger weightage for this to be two factors. First, the macro environment is not that conducive. Why is it so? We all know because of tariff war. Plus, the discretionary demand is not picking up because of the multiple reasons. Now, when we are comparing it with COVID period, I believe it's not a right apple to apple comparison because during COVID period, the demand surged like anything. We should not expect that to continue for very long. Secondly, the hiring happened very high during that time period. So law of averages playing out at this point in time. So what we are seeing is that macro environment is not conducive, which is impacting the IT more, just not AI, because we have not seen any major order coming to any Indian IT service company purely based on AI.
That's true. That's true. But so therefore, would you believe? So here's my question again. I'm just trying to understand this. That let's assume over the next 12 months, we see a number of IT companies losing some of the legacy business, losing some of the workforce, but winning AI orders, becoming enablers to AI. Uh, could that impact the multiples and thereby the prices for the better or for the worse as they move in this transition period?
Right. So at this point of view, look, valuations have already corrected a lot.
Okay.
So if you look at a free cash flow yield and other things, I think large caps are available. Most of the large caps are available at very attractive prices. But macros, we need to still wait and watch how the tariff war continues, because you just need to understand the how the client is thinking at this point in time. He is delaying his decision making to spend on IT because of uncertainty. Nobody likes uncertainty. Today he commits a big project and start investing or doing capex on IT, but suddenly macro changes, government policy changes that may impact him. So he is also taking its own time or deferring his major capex. He's just focusing on core modernization rather than looking at discretionary spending and all that. So definitely there is demand for new technologies like cloud, AI, and ML, but your all engines of the system are not working at this point. So that is why we are seeing subdued growth in most of the IT companies. As you have been continuously highlighting about the lower employment and all that, I would like to highlight that Indian IT companies have hired in Q1 almost 12,000 employees, roughly around. I'm talking about top tier one companies. So if you compare it with last quarter of this previous year, then we have seen a decline there. So there's some addition is happening. So what has happened at this point in time? There is a change. There is a in the revenue model. Earlier we used to project based on the number of employees and you can project the revenue, but that model is not working at this point in time because everybody needs to upskill. If you're not upskilling, you cannot meet the current demands, and then there is a pressure of layoffs. So it's a mismatch between the demand which is there and the supply. If employees are upgrading themselves or upskilling them, then there is a lot of demand for, if you know generative AI, you know the
Got it.
latest technologies.
Got it. Okay. Sumit, out of time completely because we have to hit a commercial break, but thank you for joining us with these insights. Really appreciate your time.
Thank you.